Alright, so let's talk about the different kind of Forex trader. Just like there are so many ways to fish, there are so many ways to trade Forex, and there is no one single way. Okay, so there are basically 4 types of Forex trader. Now let us begin with the long term and we'll go down to the short term. So some people are what we call position traders. In other words, they will enter the Forex position and they will hold it for a couple of months or even years because they have a long-term view. And most of these people, we tend to trade based on looking at fundamentals, the underlying looking health of economy, political stabilities, interest in GDP, overall big trends. So the position traders like Warren Buffett, when he enters a trade, he targets 500 or 1,000 pips per trade or more. To capture 500 or 1,000 pips, you have to stay in the trade for a few weeks, months or years. So these traders tend to look at the chart on a daily candles view. So each candle represents one day. Next we have swing traders. So swing traders will target 50 to 150 pips per trade. So when they get in, they hit 50 or 150, they're out of the trade. And the trade duration usually lasts less than a week, a couple of days, right? And they look at charts with hourly 4-hour candlesticks. So those are swing traders. Next you get day traders. And day traders, as many applies, they buy and sell within a day. They trade rarely past 4 hours. At the end of the day, they close their trades. So normally a day traders do a couple of trades per day, maybe 1, 2, 3 trades a day, where swing traders, it takes about 12 days to close a trade. So they will not take as many traders, and position trade will even take less trades because one trade might last for a few months, okay, or even years. So day traders would look at charts and analyze based on 15 minutes candlestick or 1 hour candlestick or a 4-hour candlestick. And lastly, the shortest time frame is for the scalpers. Scalpers usually enter and exit within a few seconds. So they buy, boom, they sell, and they just target 5 to 10 pips and they are out of the trade, and they look at 1 minute and 5 minutes candlesticks. Again, we have successful traders with all these 4 types of trading. My favorite position is day trader. That's right, I usually take anywhere from 1 to a maximum of 3 trades per day, because if I take an average of 2 trades times 2, in a month we are doing an average of about 40 trades, which is more than enough for me. Okay, and again my usual target is like 20 to 40 pips per trade, and I take a trade on 15-minute candlestick, and each candle is worth 15 minutes. So let me show you the charts and show you how this method works on the chart. So let me show you an examples of different trading styles using the chart. So what I'm using is the MT4 platform, which is a trading platform that is common among most traders, and most brokers use the same platforms. And during the lesson of analysis, we're going to learn exactly how to set up the platform and how to use all these softwares. But for now, I'm just gonna show you some basics of how to trade on different styles. So I'm looking at the Euro USD. Forget about my chart, is a bit old. And the market is closed right now because I'm doing it on the weekend. You can see that the price are not moving, but when the markets open during the weekdays, you can just see the price moving rapidly. Okay, now what I've selected is D1, which means daily candles. It means every candle here represents 1 day, 2 day, 3 day, 4, 5, 6, 7, and so on and so forth. And you can see red and green candles. The green candle represents bullish candles, or when the price was going up and it closed higher than where it opened. And bearish is the red candles, means price was going down, meaning the price closed lower than where it opened. And again, you'll be learning candles patterns in details under the group of lessons that we have. So right now I just want to show you that for position traders, for long-term traders, they look at daily candles. For example, they might see an uptrend and say, okay, I want to enter the trend. You can see this is a very clear uptrend over here. Okay, they might say I want to buy here, buy the Euro USD, and then maybe I want to sell it somewhere here, for example. Okay, so how long is this? April, May, June, July, August. So it's 5 months for the whole one trade, which is a very long term. And how many pips is that? Let's take a look. If you click on this plus sign here, across here, and click on this and you drag, do you notice you can see the numbers are changing? There's 4376, and as you drag it up, now it's 4638, now it's 513. Yeah, can you see that? Those are the number of pips that this guy is capturing. So in other words, if you were to buy from here and then to sell it here, let me see, how many pips are this? That is 6131. Can you see that? Now 6131 consists of 4 decimal places, okay? But in this case, the 1 is a fractional pip, so you ignore the 1, so you take 613. So this means it's 613 pips captured right there, okay? So it means if you were to buy here all the way to sell it there, how many pips are there? You have 1357 pips, right? Because the 3 at the end is a micro pip, the fractional pip, so you ignore that last one. So it's 1357, so it's 1357 pips. So that you can see, for a long-term position trader, they will need to capture 1,000 pips, 500 pips, 2,000 pips. So to do that, you have to be in a trade for a couple of months. Okay, so that's position trading. So that's not my style. Next will be swing trading. Swing trading is, again, you tend to look at hourly candles as a swing trader. When you click H1, it's hourly candle. So now, instead it's like you are zooming in now, so that each candle represents 1 hour, 1 hour, 1 hour, 1 hour, 1 hour, and so on and so on. Each candle takes 1 hour to form. So as a swing trader, you can look at the hourly candle, 1 hour, 4 hour candle. For example, trade from here, I can see an uptrend here. Yeah. So, okay. And then there's consolidation going sideways. So they may buy somewhere like there, and they may sell just there. So they capture about 130 pips. Remember, the 5 is fractional pips, so that's 131 pips. They capture 131 pips, they out of it. And again, from here to sell, they buy and sell from there, and it took a couple of days. So from around 5th to around 11th of July. So that's about 6 or 5 days. So that is swing trader. The trade lasts for a few days. They look at 4 hours, 1 hour candles. Okay. Next we go down. We go to day trading, which I do. Now I'm a day trader, and as a day trader, I tend to use 15 minutes candles. So now it's like I take a microscope and zoom it even further down, and each of these candles you see over here, these are 15 minutes candles. So each minute represents 15 minutes, right? So as a day trader, I will usually go for 20 or 30 pips and I'm out. So I could for example, I notice a good trend here. Okay, trend going down and it reverses up. I could take a trade here. I'll teach you again on lesson 2 the strategy of impulse pullback, or based on moving average or resistance and so on. So I'm not showing you the exact strategy right now. I don't want to confuse you. I'm just showing you how many pips I capture. So I could enter here, for example, as a day trader, and I capture something like about 242, yeah, about there. Good. So that's 24 pips. So I buy somewhere here and then I sell somewhere here, right? So that is around 24 pips, and then sell there. That's around 4 pips. Yeah, that's it. And I'm out. I go for an next trade. I'll buy here and sell there. So I'm capturing the very short-term trends within the day. So you can see that this trade from here to here lasted between 3rd October. It's within the same day, just the 3rd of October. So how long did this trade take? So this trade lasted for 2.5 hours. Okay, and I'm out of the trade. So this is day trading. And finally you get scalping. And scalping I don't do because it's too fast paced for me and stressful. I can't manage it. For scalper may use 1 minute or 5 minutes, so they might use 1 minute candle. It's kind of like you zoom in further down like a microscope, so you can see each of these candlestick is 1 minute. It takes 1 minute to fall, and a scalper may say, hey, this may go sideways and now it's going up, so they buy here in like 5 minutes, 10 minutes. You can see 10 pips. Okay, you'll see 103. So they buy here, they get 10 pips, poop, they're out, they sell again, they buy in again, and then they sell. Very stressful. You can take a lot of trades a day. It's not my style, but for scalpers, if you're comfortable,